Hello, I'm Sami Zaidan. This is Counting the Cost on Al Jazeera, your look at the world of business and economics. Gold has overtaken US government bonds as the world's top reserve asset. Are countries and investors simply hedging their risks, or is confidence in American assets beginning to erode? Central banks are hoarding gold. China is pushing to internationalize the yuan. BRICS nations, they're seeking alternatives to the greenback. Is the dollar's dominance starting to weaken? %27%. That's the share of gold in foreign reserves held by central banks around the world at the end of 2025. Well, the European Central Bank says that has surpassed US Treasuries, now at 22%. You see, for decades, American assets were the world's ultimate safe haven. Now, central banks are buying gold at a record pace. China is pushing to expand the role of its currency, the yuan, in the global financial system. And BRICS nations, they're trying to reduce their dependence on the dollar. Well, the Iran conflict, America's rising debt burden, and uncertainty around President Donald Trump's tariffs are all taking their toll. Yet the greenback still dominates global trade, finance, and foreign exchange. The world is not abandoning the dollar just yet, but the search for alternatives is accelerating. Fintan Monahan reports.
Investors are increasingly going for gold. The precious metal has long been viewed as a hedge against inflation and a safe haven during times of economic turmoil. The price of gold has gone up around 80% over the past 2 years, and it's also becoming a preferred choice for central bank holdings. Bullion now accounts for around 27% of global reserve assets. That's up from 20% a year earlier. And this shift is coming at the expense of US Treasury bonds. Central banks have cut their store of these dollar-denominated securities from 25% to 22% in the same period. For a long time, the dollar has been the de facto global currency. Bonds backed by the US government and the strength and stability of the US economy have been viewed as highly secure and a safe bet in uncertain times. But some see reasons to be concerned. The US national debt continues to grow and now stands at nearly $40 trillion. As deficits keep mounting year after year, more and more Treasury bonds are being issued to cover the cost. US President Donald Trump's decision to impose sweeping tariffs last year also shook perceptions over the consistency of US trade policy and its reliability as a partner. Many countries are also making a strategic choice to reduce their reliance on the US dollar. China has been looking to internationalize its own currency, the yuan, positioning it as a global alternative. Doing so would strengthen its position on the world stage.
The yuan has become the largest settlement currency for China's external receipts and payments. Globally, it ranks as the second largest trade finance currency and the third largest payment currency.
This was further boosted when Russia was shut out of Western-controlled financial institutions after its invasion of Ukraine in 2022. Since then, it's been conducting much of its cross-border transactions using Chinese yuan. Some other countries are beginning to do the same, wary of the US capacity to weaponize its dominance over international finance.
When the previous US administration began using its currency, which remains the world's reserve currency, as a tool of political competition, everyone started to wonder, could they use this weapon against us too? And what would happen then? What would happen to our dollar-denominated reserves? What would happen to our money invested in US assets?
The US dollar is likely to remain the most influential global currency for the foreseeable future. But in an increasingly fragmented world, challengers are beginning to emerge. Fintan Monahan, Al Jazeera, for Counting the Cost.
China has been trying to boost the use of its currency, the yuan, in global trade and foreign exchange. Chinese businesses are increasingly using it in international dealings. Last year, around 30% of China-linked trade settlements were in yuan, up from 13% in 2019. The value of cross-border transactions using the Chinese currency has also been growing. It stood at 64 trillion yuan in 2024. That's $9.5 trillion worth, around 7 times as much as it was in 2017. But the yuan may still have a long way to go. You see, China says it's the 3rd largest payment currency, but data from the SWIFT payment system ranks it hovering between 4th and 6th. And according to the IMF, the US dollar still accounts for around 57% of foreign exchange reserves. The euro makes up 20%, while the yuan is around 2%. There's been a major rush into gold that's accelerated this past year. Take a look at this graph. You see, back in June 2025, gold was at around $3,300 an ounce. It peaked at just over $5,400 in January, before settling back down to around $4,200, which is still, of course, still much higher than before. Now, some of this is down to fears over inflation and global economic instability. Gold has traditionally been a safe haven that holds its value in times of trouble. Many nations are also diversifying their reserves over security concerns. You see, after many Russian assets were frozen by Western sanctions in 2022, there was renewed interest in alternatives like gold. Central banks in China, India, and Turkey were among those increasing their holdings. Well, for more on this, let's bring in our guests. We have joining us from Cambridge, Massachusetts, Jeffrey Frankel. He's a James W. Harpel Professor of Capital Growth and Formation at Harvard University. He also served at the Council of Economic Advisors under the Clinton administration. In Washington, D.C., Shirley Yu. She's a political economist and a professor of Chinese geoeconomics. And in Cape Town, Iraj Abedian. He's a chief economist at Pan-African Investments and Research. Warm welcome to you all. What I want to do right off the bat, at the start of the show, can I ask each of you in 10 seconds to answer one simple question? I'm going to start with Jeffrey. In 10 seconds, Jeffrey, is the world losing trust in the US dollar?
I think there is a gradual move in that direction. Yes, that the world is losing trust in the US dollar and US Treasury bills. But there's an absence of other currencies to take its place. And so I think the dollar remains in #1 position and will for a while.
OK, we'll get into the what might or might not take its place. But Shirley, your 10 seconds, is the world losing trust?
Yes, particularly in the emerging world.
OK, and Iraj, how do you see it? The world pulling the plug of faith on the US dollar?
Absolutely, for both technical reasons, that I think, as Jeffrey mentioned, but also because increasingly American authorities are weaponizing US dollar, and that is not good for maintaining trust in the reserve currency, US dollar.
Oh, right. So we have a moment of consensus amongst our panel right from the beginning that the world is losing faith in the US dollar. So let me go back to Jeffrey and ask the question, with the rush to gold, then, is it simply a diversification that's going on or a complete replacement of the dollar?
Well, it's not a complete replacement of the dollar. You notice I said that there are no other currencies that are candidates to totally replace the dollar, but the gold is not a currency, of course, and central banks can hold international reserves in the form of gold. 20 years ago, we thought gold was finished as a key asset in the international monetary system. But in the last 20 years, many central banks, particularly in emerging market and developing economies, have held more and more gold. To diversify away from dollars, yes, but also as a kind of hedge against inflation and geopolitical uncertainty.
OK, Shirley, China's been one of the biggest loaders up on gold since 2022. Why? Is Beijing actually trying to build a post-dollar financial system and architecture?
Well, Sammy, let me go back to your fact. First of all, the gold share in China's PBOC reserves currently hovers around 9% based on gold valuation. Back in 22 to 23, the gold share in PBOC's reserves was around 3 to 4%. So in a span of over 3 years, yes, China's accumulation has been spectacular. However, according to the IMF, by 2024, the gold share in the reserves of the world's advanced economies was around 25%. So let's look at this. If China were to converge simply with the gold shares in the reserves of the Bretton Woods legacy holders, that would mean a long-term structural gold accumulation for quite a long while. So what is even more striking is that in 2025, China has actually courted friendly countries to purchase bullion and store them inside China. And I think that'll represent an even more pivotal shift. China's motivation is clearly not to displace the dollar with gold. It is to sanction-proof its economy against the potential weaponization of the dollar financial architecture. Since the U.S. sanctioned the Russian foreign currency reserves in 2022, China has been preparing for two things. One is to reduce the dollar exposure, and the other is to reduce the vulnerability through the dollar financial architecture. They are not the same things, but they accomplish the same goal.
All right, so
obviously,
it's about
the latter
reducing
one is much harder
exposure
to accomplish.
and vulnerability. Iraj, where does that leave the global south? Does that leave them? Because it's mainly the big economies which are accumulating dollars. Does that leave smaller economies in the global south exposed to dollar volatility?
It does disproportionately, and simply because the smaller economies, the less developed economies are growing at lower rates, and therefore their need for total reserve is also not as big as China, for example, or India, but particularly China that's been growing fastest, which means not only China and other fast-growing emerging economies need to have more reserves, but in accumulating and needing more reserves, they need to also hedge themselves against a potential fall in the dollar value for the reasons mentioned. Therefore, the emerging markets generally remain vulnerable, overexposed, because their economies are not growing. They cannot diversify as fast as a country like China or other fastest growing economies in the emerging basket can do.
All right, Jeffrey, what is the bottom line for that? Because we've seen, of course, I think since, if we look particularly since the US and Israel launched those attacks on Iran, we did see some degree of rise in demand for dollars, but overall the dollar strength is down compared to the beginning of the Trump administration. I think it's down about 10%. What does that mean for the safe haven status? Is it gone? Is it going for the dollar?
There have been geopolitical concerns that predate Trump, but Trump has done many things which undermine the position of the dollar. I would have thought not long ago that the dollar was in an unassailable position, really entrenched because of lack of alternatives and inertia in the system and so on. But Trump has taken a sledgehammer to the position of the U.S. and the world economy and the world more generally, and that includes the position of the dollar. So he's undermined confidence by assaulting the independence of the Fed. He's running out debt in an unsustainable way. He's acted unpredictably in trade policy, violating international agreements and domestic law. He's been inexplicable in many things. I mean, the launching of the war on Iran.
None of that is good for predictability, right? None of that is good for having a safe, stable bet somewhere under the mattress, so to speak. Shirley, is there an opportunity for the yuan? We've seen the 10-year yields on yuan bonds remaining steady in that period at 1.8% during the US and Israeli war in Iran. Is the yuan building that kind of trust and stability that a reserve currency requires, or would that be stretching things too far?
Well, I don't think there is a direct correlation between the Hormuz crisis and the yuan's stability. So let me explain. There are two triggers for the bond yields stability that you mentioned at 1.8%. One is insulation and the other is deflation. So Chinese domestic bond market is actually a captive market. The foreign ownership of Chinese government bonds stands currently, I believe, at mid-10 digits and falling. So a potential Chinese government bond buyer is a bank or insurer or Chinese households who use their savings. So when the crisis happened in Hormuz, the Chinese savers cannot really divert their assets due to geopolitical risks offshore. So they are tied to one of three major investments in China: properties, stocks, or bonds. So ironically, instead of pushing the bond yields higher due to the Hormuz crisis, it's actually helped lower the bond yields in China because there is also a flight to safety to Chinese bonds domestically. But on the other hand, the bigger issue is really deflation. China has been battling deflation for the past 4 years. The latest inflation CPI reading was at 1.1%. So any sort of oil shock is not priced into the bond market simply because the fundamental issue in China is not too much of demand, rather not enough of it.
Okay, interesting. What is the bottom line for the global South countries, Iraj? Because on the one hand, you could argue that a weakening dollar, hey, that reduces the dollar-denominated debt burden on countries, but on the other hand, it makes imports more expensive. What balances what out more?
Yeah, I think there's no question that the global South is far more dependent on the rate at which the global economy is growing and the demand for their particularly minerals and other commodities rise. Because the global South is not a really major player in the capital market in terms of bond holding or long-term investment holding or export of foreign direct investments. They are very much driven by trade. And therefore, to the extent that the current situation with the rising and exceptionally heightened geopolitical risk brings down, after all, brings down the rate of growth through higher inflation, higher interest rates, and lower trade. That's not good for the global South. The global South pays the price of these big players, big economic players, geopolitical players, playing geopolitical games, but affecting the welfare of the global South by and large.
It's a sad story that we often see repeated, right? The little guy picks up much of the bill. Surely, I want to come back to you and look at it from the perspective of international trade, though. China-linked trade settlements in yuan grew from 13% in 2019 to 30% last year. Are we seeing an internationalization of the yuan in international trade?
Yes, of course, and beyond international trade, in global investments and even in foreign currency reserves. The RMB internationalization has been a more than decade-long story. It actually started to really be formalized post the global financial crisis, and it reflects the aspirations of an ascending global economic power. But I must say, though, RMB internationalization is also not a destination. It is a journey. I think Professor Jeffrey Franco has written about this topic quite extensively. The U.S. Became the world's largest trader in the 1870s. It became the largest economy in the interwar years in the 1920s. And it took only until 1945 at Bretton Woods that the U.S. became the architect of the global currency architecture and the lender of last resort. So it took the U.S. about 70 plus years to accomplish the goal to move from being the largest trader to the lender of last resort. And so it is a long journey. But today we're seeing the rising usage of the yuan in global trade settlement, particularly in the global South. One impetus is obviously the weaponization of the dollar. Therefore, a concerted effort by emerging economies to de-dollarize collectively. But the other interesting phenomenon is the onset of financial technological innovation. Today with BRICS Pay,
let me bring
blockchain.
We'll get to that in a moment, but I want you mentioned Professor Jeffrey and what he's already written about, and I want to ask Professor Jeffrey if we're looking at this in terms of the international trade. Are there some limitations before we get carried away with the alternatives to a dollar-based international trade system? Things like the fundamental financial openness of China, not to mention the threats from Donald Trump on BRICS nation. I think he was talking about 100% tariffs at some point if they try to break dollar dominance. Does that act as something of a break?
Well, Trump has made a lot of threats, and many of them are meaningless. And I think that one about the BRICS currencies is meaningless. There's not going to be a BRICS currency regardless of what Trump does. I mean, I don't even understand whether it would be the renminbi, the yuan, or whether it be a basket of the BRICS countries, and it's not viable. But Trump's unpredictability and unreliability has certainly helped undercut confidence in the dollar and has contributed to what was a long-term gradual decline in its international use as a reserve currency and its other international uses.
All right, I want to briefly... Okay, finish the thought, Professor Frankel.
I'm just going to say China, indeed, financial markets are not sufficiently deep or liquid or open to challenge the dollar for the time being.
All right, briefly, Shirley, Russia and China are building some of those alternatives you touched on to SWIFT. How far can they go, though?
I think between China and Russia, the bilateral trade is already fully de-dollarized. However, if we observe a recent event, which is really, really interesting, the U.S. Treasury sanctioned 5 Chinese teapot oil refiners that conducted trade with Iran. But for the first time in May, Beijing invoked the anti-foreign sanctions law. It instructed its banks to ignore the U.S. sanctions and continue to transact with the 5 blacklisted entities. And so I think this is unprecedented. I'm not sure what the signal really means. It could mean that either China thinks that the U.S. will not impose secondary financial sanctions on Chinese banks, or it's already had some levels of confidence to weather the potential calamity of a financial sanction on its banking institutions.
Iraj in Cape Town, ultimately, are we looking at a 2-tier global system, whether it's reserves or trade, where maybe wealthier nations can afford to hoard the gold, they can afford to look at alternative clearing systems, they can look at alternative currencies for trade. Poor ones might not have all of those luxuries.
Yeah, without a doubt. We have had, in fact, a 2-tier system even during a Bretton Woods system. We've had the poorer countries more vulnerable to the volatilities and vagaries of international financial system. What we have now is an emerging potential reserve currency, much like euro was. Remember, euro became a reserve currency slowly. Some central banks, depending on the level of trade that they have, they hold some euro for alongside US dollar and gold and others. So I think the question of multi-tier reserve holding is one issue, but the emergence and acceptance of a substitute for US dollar is a completely different matter. You need to have a jurisdiction that's got independent judiciary, it's got capital markets that are deep and well regulated, and to challenge the US dollar or any other reserve currency or gold for that matter. But in fact, all, with the exception of South Africa in the south, very few, if any, other emerging market has got those attributes. But then the South African economy is too small and its capital market is minuscule to be able to do that. So the countries of the South remain vulnerable and will do so until the global international financial architecture is more balanced and more equitable in their favor, or not only in their favor, but at least taking account of their welfare.
Right. Professor Frankel, I want to propose, shall we say, maybe an alternative universe here. If you look at what the European Central Bank board member Isabel Schnabel said last month about the increased use of stable coins, reinforcing the dollar's global dominance, could that be a lifeline for the dollar that changes the picture of, I don't want to say pessimism, but shall we say skepticism for the dollar's future that we've been talking about?
I suppose there's some in the Trump administration who are thinking that way, but I'm skeptical. stablecoin is a way to supposedly to increase global demand for dollar assets, but I don't see such a strong future for it as other people seem to see.
Okay, now I'm going to try and end once again with a question for everyone. I think we can take about 20 seconds each on this one, but a final question. We started with a consensus that perhaps trust is waning in the US dollar. Does that mean an opportunity particularly for BRICS de-dollarization talk and initiatives, a common currency? Is that political rhetoric or something that could become economic reality? In 20 seconds, let me start with Iraj.
No, I think the concept of a BRICS currency is a misnomer, a currency that wants to emerge as a trusted and held currency requires a well-defined jurisdiction with political stability and credibility. That's a soft power, and trust comes from that. And it requires an independent judiciary and a very significant one, a major share of the global capital flows that at the moment, none of the BRICS countries or any other country than the United States has.
Okay, and Shirley, your 20 seconds for a final thought on that. Is BRICS the way forward?
Yes, it is. The emerging economies will continue to transact trade with more local currencies, but the fundamental shift will be the global currency architecture that will be enabled by blockchain.
All right, and I saw Professor Frankel kind of raise your eyebrows. So I'm guessing you might have a slightly different perspective on all of this.
Well, as I said, I don't see a future for BRICS currency. In addition to the limitations we've heard on let's say, the renminbi becoming a leading international currency, I just don't understand how the BRICS countries would agree on a common currency, whether it would be a basket of their individual currencies or they would accept the renminbi. It just seems to be a complete non-starter.
All right, so we started with a point of consensus and we've ended with different perspectives for what the future looks like going forward. So it's been a great discussion and exchange of views. We thank all of our guests. Jeffrey Frankel, Professor of Capital Growth and Formation at Harvard University. Shirley Yu, political economist and a professor of Chinese geoeconomics. Iraj Abedian, Chief Economist at Pan-African Investments and Research. And that's it for our show, but remember you can get in touch with us on X. Use our hashtag AJCTC when you do, or drop us an email. countingthecost@aljazeera.net is our address. There's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Sami Zaidan from the whole team here. Thanks for joining us. The news on Al Jazeera is up next.